A very good evening to you traders. It's Mark here from Day Trading Room. Time is 9:15, so just after the cash close. That's London time, Monday 13th of June. Following on from the theme of the previous video, which thank you very much for all your feedback. Do appreciate it. Constructive criticism as well as positive feedback, all welcome. I'm going to talk about the trade I took on Friday. I took one trade on Friday and great profit on the trade. But not only that, more importantly for me, it was a trade that I held to a target which I had in mind. The hypothesis all worked out, and as the trade was working, I thought, well, why close it? So I'm going to talk through that. I'm going to talk through why I took the trade, the hypothesis behind the trade, what for me set up the trade, the actual trigger for the trade, and then what allowed me to hold on to the trade for the longer period. So let's talk about what happened. So this here, let me get my drawing tool out. Okay, this was Friday's trade here. Let's mark that off as Friday, and this was Thursday. So just wanted, this is a background. You've got 15 minute. Okay, you can see what's happened. We've had pretty steady down move. It's just been consistently down. Even days where we've had attempts to push higher have all sort of turned around midday and pushed lower. And by the way, it's worth looking at the 8 o'clock London time period. So the last hour, there's been a lot of selling coming in then. So a little heads up on that. Have a look at that on your chart. Okay, so Thursday really, we had this trend day. Let me put this on a 5 minute so we can see that a bit clearer. This is the Dow, just a daily, by the way. Daily session, should I say? It's on a 5 minute chart. So we had a pretty strong trend day. We gapped up, we didn't push lower, and had all the hallmarks of a trend day. Not my type of thing. Don't really like them, so I tend to stay out, stay clear of those. Preferring the down drive or other type of day. So anyway, that was the day we had. So put yourself in the position of a lot of people. Okay, we're thinking there's been a bottom put in here. We've broken out of prior day highs. We've got a good solid trend day. In fact, we've broken the day before that high. I think it was Tuesday. So bulls are pretty interested. They've done a lot of buying in this area here because this is where the most of the trade was conducted. Now we broke through that high there and we couldn't break, and we broke through again, double topped, and we couldn't break, and that triggered off a pretty large sell-off, a 65 odd point sell-off. Now that is the start of the trade setup. Okay, that trend can't hold. This high can't hold. In fact, all it's done is suckered in retail buyers thinking, okay, or stops or triggered short stops. All it's done is it's done the classical flush or suck in job. So that was the first trigger for me. Okay, looking for the next day. Now what's important in my eyes is the overnight trade. Okay, so let's select this on overnight. Shows all the overnight trade. Okay, here's the YM. So that's the trend day there. This is the pullback and actually gave back quite a lot of gains. So we've got a lot of people caught here. Now the important thing for me, this is just again compounding the setup, compounding the hypothesis, is there's the close. Okay, overnight trade barely pushed up into this trend area. That's all we got to. You would expect if we had a bullish overtone to perhaps a 3 or 4 day rally, we're going to get this rally, we're going to get this pullback. Okay, that's a little bit deeper than they'd like, but if this then revisited and started trading up here where this trade was done, again, excuse my drawing tool, then there is still a bullish undertone there. But the fact of the matter is, we could only get a very small push up before rolling right over in the early hours of London time, so 6 a.m., 4 a.m. to 6 a.m., right back to almost the opening price. Well, in fact, the opening 15-minute drive. Okay, so we've given back all those gains Everyone who'd bought from here to here was now stuck. Anyone who thought that was the bottom is now sitting, sweating a little bit, thinking, hey, you know what, I could have been wrong. Any seller, any large seller, mutual fund, hedge fund, pension fund, whatever institution, government, who has been selling in the push down over the previous weeks and who has backed off a little bit, thinking, okay, we've got a bit of a trend day here. Now let's just see how far this pushes up before we start our selling again. They are going to have to start a little bit more urgency. Okay, they've seen pushes up haven't held, and even more so overnight has driven back down and given back all those gains in no time at all. And so we've got this situation where a lot of people are trapped on that dead cat type bounce. Now, we had a little bit of a push up. This was sort of a morning London time, but in reality, we really struggled to push, and any push higher was met with a drive lower. So this is the open here. This is the open. This is the half past 2 London time open. 2:30. So you can see what we did is, significant drive lower relative to yesterday's range. Push down. We're tempted to push up, couldn't hold. Push down, little double bottom here, but again that didn't really hold before we pushed down. And this is pretty reasonable support level now. This, however, is quite important to me. Let me just put on to 1 minute. The little push up pre-market. Now here we go, about 2 o'clock we got a little push up just before the open. Just before the open got a little push up. So I'm thinking this is a great short setup for all the reasons that I've just explained. Let's put on a Dow cash chart as well, and we'll show you some targets I had in mind for the trade and actually were hit. So this is Dow cash, dollar Indu. You know, the prior day's action, number one. The overnight trade, number two. The open now. I'm looking at the open now. On the open, we saw interesting situation where we opened up. Where are we? Here we are. Let's get back onto the YM so we can talk numbers that mean something in terms of trading. When we opened. Where are we? When we opened, okay, we're gapping down. Obviously, there's a gap down from the overnight push. Now, we barely pushed up. We barely pushed up, and the open was around 03, and there was a big seller sitting there at 09. I think the high was 11, but he was sitting there at 09. You could see that on the histogram. If you're watching your dome, you could see how that volume, that supply was coming in, and the demand was just being soaked up. It was just sitting there, and that histogram was building. The volume traded at that price number was building, and that was the trigger to get short. Now, you've got to be prepared to use a tight stop on that because you don't want to be caught on an opening drive the wrong way. But when I see that, and it's confirmed with my overnight action, it's confirmed with my prior day's action, it's confirmed with my longer term chart read. Okay, we've come down heavily. We're in this pretty deep pullback. A lot of systematic selling. I'm yet to see a flush lower. I haven't seen that flush out. So I'm still thinking, okay, this has got some mileage in it. And more importantly for me is the targets we had in place. Let's go back to the Indu, the Dow Cash. 12k is an obvious target, and it's not too far away. Let's just draw a line here. There's the 12k cash, approximately. So I've got a logical target. I've got a very, very good risk reward. I'm in at the 09 or the 08. I can have a stop above that high. I'm leaning on that short-term tape seller, but thinking of a longer or medium-term hold, or medium term for me being an hour or so hold, or whatever it takes. Now, I just want to add on here the ticks as well, because I'm in the trade. And I want to also show why I stayed in the trade. And also, if you weren't in the trade, what would have allowed you to get into the trade? Excuse me while I just sort out this into some sort of reasonable action. Okay. So there's the down day. Now let's put a zero line in on ticks here. So got my zero line in. Trend's a little bit skewed, but you can see really what's happening here. Now, okay, this is what allows me to stay in the trade. Now, obviously, I scale out the first drive. I immediately try and reduce my risk, not too much because I'm still looking for that 12k target, which ultimately was hit, which was a lovely trade. It's an 80-point trade on the final. It went a lot further, but my target was hit. Very pleased to have held a portion of the trade for that, but I also want to talk about why you can stay in a trade if you're not in a trade, and also what allows you to stay in a trade and give you that indicator or that signal that the market is still weak. So here's the open, there's the drive low, and I look at the ticks, very weak. Now this is what I want you to look at here. This is the very important thing, and is actually the part or the minute of the uh, yeah, it's the minute. That's a 1 minute candle. Yeah, it's the actual, or 1 or 2 minute cluster, should I say, that made me realise or have conviction that this was going to go, and it may not hit my target, but it's got more in it. Now, why was that? Because if you look here, the low was 11,987. The high of that next candle was 11,994. 4, 5, 6, 7 ticks. That is it. Okay. Now the 7 ticks on the market. The tick index pushed up, but the market could not push any higher. The market could only manage 7 ticks. Now don't forget, we're in the opening drive still, so we're in the little bit of urgency mode. First 15 minutes, nice bit of urgency. If you get on an opening drive move, stick with it unless something tells you otherwise. Ticks couldn't bowl back to zero, but more importantly for me, and this is the key thing that I want to document, and hopefully you'll see where I'm coming from with this. Ticks are pushing back up, indicating some possible strength, but the market could not go up more than 7 ticks. Now let's think about that in terms of what actually is happening. Now the tick index, as we know, is the sum of the trades being conducted on the bid versus trades being conducted on the offer. So if the tick index is moving up, we can say that more buyers are stepping up and being aggressive, and they're hitting those offers. Now, the net sum of them is still negative, which is important. We know that it's still a minus 200, so they're more overall over the whole universe of stock. We're still getting the majority of people hitting bids, but what we're getting here, I want to point out the change in ticks. They've gone from low to high. They've pushed up, indicating that there are now more buyers becoming aggressive on the stocks. But the market cannot push up. Now what is that telling us? So that's telling us, despite there being aggressive demand, or an increasing demand, an increasing aggressive demand is the correct terminology, because they are hitting those offers on that universe of stocks. So aggressive demand. Despite that, the market is not moving up. So in other words, the offer is not lifting to print the next offer. In other words, there is a large seller either sitting there with large size on these offers across the whole of the stocks, or he is reloading with more size every time that gets filled. And so that is why we're getting the spike up in ticks, but we're not getting a resultant move up in the market. 7 ticks is nothing in the market. It's a few stocks are lifting a couple of ticks up on the offer. So that is what is worth looking at, and we had that consistency throughout the rest of the morning. Push up in ticks again. Couldn't hardly push up at all. Ticks even went positive. Couldn't break a high. This was the most important one. This, don't get me wrong, this was the most important one of the lot, and the one that allowed you to hold on from there to this good push lower, and take a good chunk out of that trade. But just thinking through what you're seeing on the chart relative to people's emotions and actually what's happening in the underlying market and underlying index and underlying stocks. Ticks going up. Just to summarize again, ticks going up indicating trades at the offer. Trades at the offer, you'd expect if there's enough, they will lift and they're going to print the next offer up, which then makes the Dow or the S&P or whichever market it is start to move up, because the basket of stocks, if they're all trading the next offer up, the next price level, then we're going to move the index up. But if the offer isn't lifting, so in other words the ticks are increasing, indicating that, but the offer isn't lifting, then we can deduce, we don't even have to have our level 2s up on all of the stocks, we can see that there is a seller there soaking up all of that demand. And so the resultant conclusion is that there is still a lot of supply coming into the market. So if we're not short, we get short. If we're already short, we stay short. And yes, on a different, a bit of a lesser scale here, just showing, what's happening, and throughout the subsequent move up in ticks and the price, and then we got that drive lower, and we tagged that 12k on the cash, which was great. So that was just a little bit of theory behind, a little bit of my thought process behind the actual trade. So, prior day's action, solid day, solid trend day, but it couldn't hold. Selling at 8 p.m. again, it gave back quite a lot of the day's gain. And then the number 2 overnight action, that was when that was key. I didn't even attempt to push back higher into the previous level. All the gains were given back overnight. You just got to consider what's happening. A good trend day, couldn't hold, sold off, overnight confirmed. I'm looking for the short. So I've got that little longer term hypothesis. The market opens, I see it push up, I then tape read the short entry, seller, 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 buyer's hitting him, he's not lifting, bang, I'm in, very tight stop, but the reward is huge, knowing that I'm going to scale out as it comes my direction, but ultimately looking for that long term target. So it happens now and then, but the idea is to sort of blend the longer term hypothesis with the short term entry. So a scalper's day trader's entry using that tiny risk, but then once the trade goes for you, let the trade mature, let the trade work. If you looked at the videos, you'll know that's something that I'm working on, and I'm pleased that, okay, profit was great, but more importantly for me is the fact that I have been able to hold the trade, and that was the only trade of the day for me. That just very pleased with it and happy to end the day on that. But anyway, I hope that's been of some use. It's great to document it. I'm looking forward to looking back on that several months down the line, and yeah, hopefully that's of some use to you guys as well who are looking at the blog. If you haven't looked, I had a post on the blog I think last week, just showing the expected opening drive, 15 minutes, the expected range, just crunching some numbers to help you hold trades. Have a look at that. It's only my work, it's nothing fancy. It's just so that if you're in the first 15 minutes, okay, and you're on the end of a trade, how far do you allow that trade to run? Well, if you know what the expected normal, in inverted commas, 15-minute range is, then you know your sort of targets you can get. Or subsequently, if you're looking to take a fade trade and we get an extended 15-minute range, you can look where to start to position your entry. And also, if you're getting a really strong 15-minute drive that's unusual, then perhaps you can think that the day might be more of an active day. There might be more participation from the institutions. So I cover quite a lot in this video, and you have to bear with me if I go off track or don't explain it very well. Feel free to email me for clarification on stuff. But anyway, most important thing, as we know, is manage our risk. So good trading, guys. Hope you had a great day today. Hope you had a great day last week. Looking forward to some more great trading days this week. Number one thing, manage that risk. If you manage that risk, then everything else will slot into place. Take care. I'll back with another video within a few days. Good trading.